Hi everyone, Evan from the Trade Risk January 7th, Wednesday, and I'm here with my midweek update, first video of 2015, and we actually had our first green closing day in the indices from in 2015 today as well. You can see we've had 5 down days now, closing down days in a row for the S&P for the SPY, and today, we finally broke that. We got a pretty nice bounce given where we closed yesterday, and the range today wasn't so large, but we did just maintain there and kind of grinded along the highs for most of the day, and we did get through the FOMC minutes. Pretty much a non-event, as the market seemed to take it anyway. So here we're in this holding pattern, right? We failed. We rolled over basically right at the previous highs that we made in December, and we came right back, almost tagged the lows that we made in December as well. Yesterday, right under 199. So, momentum is still sort of favoring the bears, but we are, hasn't been a whole lot of damage when you look at this larger sort of intermediate longer term time frame. Now we're just in this kind of grinding phase where perhaps we're gonna bounce around this range, or do we just see continuation to the downside, take out these lows? That definitely wouldn't be a good sign if we just started taking out 198 for the bulls. That could mean we have a bigger sort of pullback, dare I say correction, on our hands, but we're absolutely not there yet. Today was a good start, but we'll see if we can make continuation tomorrow. It was a pretty mixed bag. Let's go through some different sectors. The Qs first. Similar comments apply to the S&P and the IWM. Really, it was looking really good. This is, in my opinion, was one of the brightest spots that the bull case had closing out 2014. You could see it was basically breaking below this major resistance level, and that proved to be, at this point, I guess you can't really say it's a false breakout yet, but certainly if you've bought up here and you were trying to play for that breakout, you certainly consider it, feel like it's been a false breakout. So, we'll have to see what happens here. It's finding support where it previously found support, right around 115. So 115 becomes pretty important. The lows from yesterday become pretty important. Otherwise, if those are broken, we could see some further cascading to the downside. Let's look at metals first. They've definitely been firming up. I know, I feel like I always hate on the metals. It's just saying they're sloppy names, but they have, been firming up as best that they do. Still pretty large candled bodies throughout the past, 8 weeks of trading, especially in this gold. But it is trying to stabilize. It looked like it was going to break down here below this 113 and maybe head back down to the 110 lows. The bulls stepped in, saved it. 115, this trend line, horizontal support line I have drawn, previous lows from previous years. So let's see if it can get going. Silver, a little more actionable, actually. Again, I thought it would. Well, I didn't think, but it looked like it was going to break down, last week below this 1490 would be a pretty actionable short level that I was watching, but it never got there, never triggered, and we really just bounced right back to the upper level, and now the upper level looks like it's pretty pent up to maybe continue further. So, we'll have to see. I think above $16, you definitely do get some momentum buyers in there, and could be worth a trade. So keep silver on watch. Next, we'll jump into USO, so the overly watched market here of oil, and today finally stopped some of the bleeding inside day. Basically, tested the highs from yesterday, tested the lows from yesterday, closed dead in the middle. So, again, momentum's very strongly pointing down. Just look at the moving averages. These are fast moving averages, and they're still struggling to keep up with price. So, it's still a long ways away from finding a bottom. It could obviously V-shape or squeeze at any point, but again, the damage here is pretty severe. So, I think if it can start to move sideways here, it could help stabilize some of the equity markets, just the energy names in particular. But we'll have to see what happens. Still a strong downtrend. Not an interesting market to me to try and pick anything where I think a lot of people are trying to. Natural gas, so again, not as bad as oil, but still strong momentum to the downside. It's been selling off in a strong downtrend. It's trying to stabilize here between 14.5 to 15.5, and again, moving averages sharply pointing down. We do have some cold weather coming across the country right now in the United States. So, but look at today's price action didn't really seem to make a difference with this cold front that we're getting. So, again, we'll have to see what happens here. It needs more time to go sideways. Again, it looks like it's trying to do the hard work here of holding on and trying to stop the bleeding. So let's just see if that can continue. Maybe set up a trade in a week or two if it can continue to move sideways, but not too interesting from my perspective. IBB. So here, this was a monster outperformer today, and it actually is a name. It's pretty much my only long that I have on. I took some IBB home on the long side today. Got involved in it right about 310 as it started clearing the previous week's highs here. You see all these nice, neat resistance level built up around 309, 309 and a quarter. And yesterday proved to be a nice false breakdown. I think if a lot of people tried to short the breakdown yesterday, certainly we're trapped today with a big gap up and kind of grind higher. So again, I mean, today's candle could just as easily be a trap on the upside. I think that is sort of the market that we are in, but it is actionable enough for me to try and take a shot at this just because of the small washout that we had yesterday. I do like the looks here, and I like the clean resistance break and close, very, very strong close that we got today. So I'll go with it. I'm certainly not married to it, and I will be out on a tight stop tomorrow if things don't work out. But definitely some good action there. Another sector that was really strong today was the real estate IYR rather. This one again just really skyrocketing here. You got to go back to a weekly chart to really see the bigger picture and what it's trying to do. So looks really good. Strong day today as well. Definitely not as actionable in my opinion, just because it's already a bit more extended, didn't have a clear resistance break that I like to see. So not exactly a trade setup for me. TLT, here's another market. Again, just it's unbelievable the strength here in the 20-year. So basically tried to take out yesterday's lows. Couldn't quite do it. It closed slightly red today, but again, still holding very firm. Look how far it is above the 8 EMA. For a market like Treasury bonds, pretty impressive, trading like a growth stock. But we'll have to see. If you go back to a weekly chart, you can see, it's basically yesterday it tagged and made slightly new highs above this 2012 high right around 132.30. So again, it's not so actionable because it's run so much right now, but definitely a strong market where there's some money flow into right now. So okay, let's look at some individual names. Apple. Ever since this false breakout above 113, it's been trending down. Overshot this pivot right here around 106.30, but you can see it is trying to stabilize here. A little bit of a double bottom perhaps from the previous 2 days candles. Today, nice little gap up. Still momentum to the downside. Needs more time, but trying to stabilize. Twitter, let's move into that. Yesterday, real impressive day. A lot of people were excited about this name yesterday. And ran right smack into $39 resistance, which is basically the bottom of this range, top of this recent range that it's trying to build out, and today it just faded sort of accordingly. And I don't think it should be that much of a surprise. I mean, unfortunately, I would have liked to see it stay pent up a little bit more, close above 38 to me, and another 1 or 2, 3 days of sideways up here, and I would have taken a trade above this 39 breakout level. But it gave back a little bit today. Still, nothing really changed in the big picture. It's just consolidating, and this is the type of action you should expect. It's not in a trending phase at all, so we'll want to see. The bulls will need to see this $36 defended now if this rising trend line kind of wedges up here and it can work up against this $39 level over the next week or two. I think that's constructive, but for now, doesn't seem very actionable. It's pretty much just trapped there. Facebook, again, stuck in a range, had a brilliant 1, 2, 3, 4-day move back here and towards the end of December, and it's just basically taken double as long, but it's giving it all back, and it's just stuck in this larger range. So, $76 to $80, it's not so exciting. Perhaps it needs earnings to really get it moving, but it's not so interesting to me. Amazon, so staying sort of weak here, just kind of trucking along. It sold off now back into below 300. I think 292 becomes pretty important. It's a pretty actionable short setup, especially if you look at a weekly chart now. This 292 level is pretty high stakes support, and I think if we get a close below there, Amazon could be finally snapping and continuing maybe this potential topping pattern here. It's too early to say right now. It's still just sort of a messy chart for me, but I think below 290 would definitely give me some more confidence and get me more interested in short setups there. Netflix, same thing. I mean, I think Netflix below 330 looks like a good short. It's kind of similar in the Amazon camp. 330 really, it's I guess 320. Is this important zone for Netflix that I think could potentially be this topping out pattern here if it can continue to break down. Not so sure that it'll happen, but definitely with the way this chart looks, it's just not that interesting on the long side. So definitely bears in control, both of those charts there. Tesla, pretty much the same thing. 218 was a critical level. Wanted to see it try and hold above it. We did for a few days, and then we just failed, broke down right below it. Got the gap fill there. Again, it's still sort of messy. Momentum probably, definitely favors the downside. Get this potential head and shoulders pattern at work. Lower lows, lower highs. So it's just not that interesting. It would really need to reclaim above 230, 225 to get interesting on the long side. GoPro did break a little bit today, a little bit of a bounce off of the lows, but I think below $64, it's still, definitely sort of in the, it's still in the downtrend camp. It had a nice move here, went sideways, and then it's trying to give some back. So, the bulls will want to see this higher low get put in potentially, and then maybe work itself back above resistance, which should be around 65 or 67 zone, something like that, which would be expected resistance anyway. So GoPro, we'll see what becomes of it. Just not too interesting one way or the other. Alibaba, same thing, just consolidating. It's just flagging out here, however you want to look at it. 107.50 is the upside resistance level it needs to clear. Otherwise, it's in danger of just kind of hanging sideways or going lower. All right, let's look at some other names that were movers or potential movers today. Keys was one of them. I tried buying this actually, and I just got stopped out. I got faded. Thought we'd finally get this move above this resistance level around 34.10, but again, it looks like we still have some sellers eager to dump some stock above that level. So again, it's a good one to keep on watch for a breakout candidate above 34.20 or so, a strong close, and I think that one could get moving, just not time yet. CRL, here's one that did get moving today, broke above the 65 level, 65.10 level, and it's starting to move. Look at a weekly chart, real strong uptrend there. It's been consolidating for about 2 or 3 months, and could really start to get going, so it looks pretty good. JCPenney, another name that was all over the news today or yesterday for, I think, the increased sales guidance that they offered. So this looks good. I mean, a huge move, 20% gap move, but it could definitely have a lot more in the tank. I think if it can really break back above this $8 level and all of this chop it's been in for the past 3 months, I think, it could definitely look good and potentially revisit the $10 level. You have a big band of supply in here between 8 and a quarter and 9 and a quarter, so you'll have to definitely contend with that. But otherwise, JCPenney, if it could move sideways here for a while, I'd probably be an interested buyer in it. But all this supply right here to the left sort of deters me a little bit. So we'll have to see. But definitely keep it on watch. What do I want to do here? OVTI, Omnivision rather. This one had a real nice day. A strong day, 7% up move, but could have more in the tank. It's trying to break out here basically above a lot of supply going all the way back to August of last year. So keep that on watch. Go to a weekly chart. You can see it's been basically going sideways for a while and had a real igniting bar today. So look for some potential further there. I don't have a position in it, but looks interesting. What else do I have? Okay, Wendy's was another one that was just on fire today. 6% move for Wendy's. Ever since it broke out above this base around 850, it's just been, it's been moving. And if you look at a weekly chart of that, it's been consolidating nicely, moving higher today. $10 is pretty much the next level to keep on watch, going back to the end of 2013. So you'll want to keep an eye on that. And now a couple of names that didn't perform so well today. Mobileye, this one getting real weak, breaking back below recent lows at 39.50. So basically taking out the lows that we made in December. Looking pretty weak here, but again, on a real long-term picture here, we had this big impulse move from 31 all the way up to 58, and you could almost look at this as one big flag out consolidation pattern if you're looking at like a weekly chart. But you'd want to see it catch real soon here, otherwise you're just in danger of retesting the lows down there. And then what else? GNCR. Let's see. I don't know why I have so much issue today. Apologize. You know what? We're gonna have to skip that one. I had a note on one stock, and I don't know what it was. But we'll finish off with the XLE, and XLE is where a lot of this damage is coming from. So today we had a lot of sectors that were performing nicely today, up around 1% or so. XLE dragged on us today, just holding green, and you can see it's still obviously the most damaged chart thanks to the commodity oil rather. And I think that the market's still telling the picture right now that it needs time. We had this nice move off this $73 level, went sideways, and now we're just rolling back over. So I think eyes to the $73 level is what people are going to be looking at, but really it needs to go sideways, try and base out, try and catch itself here, maybe make a higher low. But XLE, USO, those are the things that we'll probably need to be keying off of to set the tone here in the broad indices. But definitely a shaky start to 2015. It's still early. Today was a nice bounce back. Let's see if the bulls can add to it tomorrow, or let's see if it's a fake out and gives us some more fuel for some downside selling action. So keep it on watch. Hope this helps. Hope you enjoyed the video, and I'll catch you next time. Thanks.